All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Let's take a look at what these things are doing here today as far as our ag products go. And it's been a decent day. We've got September corn up 16 cents, 5.96 even, about 3 3/4 cents off the highs. Dees corn trying to put a 6 in front of it, 5.99 even is last. We had a 6 earlier in the day, 602.5 is the high. We're up 15 1/4 cents in Dees corn. So not a bad board when it comes to the corn, and we're going to see what we've got going on in soybeans. Well, we're adding on again, 56 3/4 cents higher in that August contract, 15.29 3/4 is last, and that's still about up 4 cents off the highs. How about Novi new crop beans trying to get to $14, 35 cents higher, 13.81 is last. We've been as high as 13.84.5, and that's 15.5 cents off of that $14 mark. How about Chicago wheat? The wheat in Chicago up 30 1/4 cents in that subcontract, $8 even and a quarter. There we go. We put an 8 in front of that. March, middle of the curve there, the deferreds, 28.5 cents higher in the March, 8.32 3/4 is last, and that's about 4 cents from the highs there. How about hardwood wheat in Kansas City? Here we come. Well, 30.5 is how much we're higher in SEP. 8.70 1/4 is last, 3 cents from the highs. And that March contract there, 30 1/4 cents higher to 8.81 3/4. Another good board. How about spring wheat? Do we have it all going on there? I think so. Maybe not quite as much. Oh, yeah, we do. 36 3/4 cents higher in SEP. 9.20 3/4 is last. 5 cents from the highs. 33 3/4 cents higher in the March. 941.5 is where we're at in that one. Let's see. How about cotton? There we go. 309 points higher. 94.15. Kind of broke out to the upside finally in that Dees contract. That's what everybody's trading. And now we're going to get to our next guest analyst. That's Ted Seifried from Zaner Ag Hedge. Ted, thanks for being on the show. Well, a little bit of a turnaround Tuesday. Usually we're lower after a decent Monday, but this one is proven to be a little bit different.
Yeah, it's a turnaround Tuesday that hasn't really turned around because, we're following through on the higher trade that we saw yesterday, and we are continuing to trade grain fundamentals, Scott. We're looking at the August forecast. Yeah, right. Weather. Yeah, that's what that is. And we're looking into that forecast that's now looking into August. And wow, we got the dark red above normal temperatures, which doesn't mean that the temperatures are going to be sharply hotter than above normal. It's just whether it's above normal or not. It just means the likelihood of that is very, very high. It's as high as that chart is willing to allow. So, yeah, you've got warm temperatures, below average precip in most areas. And we're getting excited about that. And soybeans really kind of taking the lead here, because we know that August is the key month for soybeans. And if we're going into August with hot and dry, and those longer term August forecasts still look hot and dry, oh boy, the soybeans situation we've been talking about has the potential to be as bullish, if not even more bullish than what it's been this entire 2.5-year rally. With a 51.5 national average yield, we're barely going to scratch out a 200 million bushel carryover. If you start whacking away at that yield, all of a sudden, we are going to be in a really tight soybean situation, soybean balance sheet. So we're taking notice of that. We are trading that. We haven't seen this flood of inflation off selling or, impending depression selling. It's been a little while since that has happened. So grains have been able to stabilize. And now we're focusing more on that actual grain fundamentals. We're focusing more on that weather forecasting. We've got a nice 2-day pop here. We're really challenging some downtrend resistance at the moment. We could extend on this thing as long as we don't have that outside market selling pressure coming in at some time in the relatively near future. With a grain of salt, I'm going to say we have a Fed meeting happening today and tomorrow. We'll see what they have to do tomorrow afternoon.
That might be one big grain of salt, too. All right. Thanks for that. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried from Zaner Ag Hedge after these messages. All right, welcome back to Market Day Report. I am the Cow Guy. Cow Guy likes live cattle. Let's take a look at live cattle before we waste any more of your time. How about the prices over there? I would have called it steady, a little easier if we were on the floor, right? August is off 72 cents, 137.02, but we don't even really have a dollar range, so I don't want to get too excited. Dees is off 52 cents to 148.10. Yes, we're only, about 38 cents from the lows, but still, there's only a dollar range in the Dees. So got to kind of take it all with a grain of salt, as Ted just said. Steady easier when it comes to the live cattle. Now, we've got the feeder cattle board. They're going to have to deal with that higher corn, and they are showing the losses here, adding to them a little bit as we speak. August is off $1.60 to 177.70. 10 cents off the lows there. Got to keep that in mind. Going out the deferreds, October's off $1.80 to 183.45. That's 10 cents off the lows there. So kind of trading weak as we see corn maybe take a little bit of a move higher here late in the day. Finally, let's take a look at lean hogs, and we'll get back to Ted. Lean hogs, we got August up a dime, 117 spot 32, but then as you go out the deferreds, everything's off between, say, 32 and 47 cents, so not a ton happening here. We'll settle in on the D, sets off 32 cents to 85 spot 92. All right, let's bring back in Ted Seifried from Zaner Ag Hedge. Ted, anything stick out at you when we talk about these meats, or are you just kind of waiting to see what happens with the economy?
Yeah, well, as far as the livestock are concerned, it's a fairly quiet day.
Yep.
Predictably so, feeder cattle are down when corn is up, but live cattle aren't even down that much. And, like you said, hogs are mixed to slightly lower, really. So just not much going on there. I think the big focus is what's going to come out of this Fed meeting from today and tomorrow. And the market widely expecting a 0.75 point hike. The Fed just feels compelled that they have to do these things because they've gotten so much bad attention in the media, being one of the most incompetent Feds that we've had. They're coming out swinging. They've got blood in their eyes. They are going to prove a point when I don't think we really need to. I think now would be a great time for them to pause or give it like a token 0.25 point rate hike. But I don't think that's what's going to happen. And that really makes me wonder, Scott, are we going to see this inflation off selling come back into the markets later on in the week or into next week? And I'm a little concerned about that. But hopefully the Fed has cooler minds prevailing and we don't see that bigger hike tomorrow.
All right. It's like, what's going to win, inflation off or heat on, right? It seems like that's the battle right now. So we'll keep a close eye on it. Thank you very much, Ted Seifried. He's with Zaner Ag Hedge in Chicago. We are in Nashville, so I throw this over to Suzanne one more time.